Stay tuned for Retire Your Way with Dale Soutas, a leading financial retirement strategist and the founder of Soutas Financial and Insurance Solutions, right here in Fresno. Every week, Dale discusses pressing financial topics of the week, ranging from reliable income strategies to our financial markets, including Social Security, tax strategies, wealth management, RMDs, legacy planning, long-term care solutions, and most importantly, how to make sure you have enough guaranteed lifetime income to retire your way with choice and dignity. From taxes to trends to total transparency, Dale covers it all. And now, here is Retire Your Way and Dale Soutas. This is Retire Your Way with Dale Soutas of Soutas Financial right here in California. Every week, we try to help you with retirement planning, income planning, tax planning, medical planning for your long and wonderful retirement years. Maybe you are a few years ahead of your retirement. Maybe you're in the midst of it right now and you want to know if you're making the right decisions. That's what this program is geared for you and for everybody else here in the state of California. Mr. Dale Soutas, how are you doing this week, buddy?
Oh, we're doing great. Yep. All the computer things, even in my office, I do things, and it's so much fun, isn't it?
Yeah.
Technology.
On today's program, if you give a high school student the answers for a test and say, this is what's going to be on the test, they'll memorize the answers for the test. If you give them the questions to an exam, well, now that's going to make them think on their own, research on their own, and come up with their own ideas of what's possibly important to them and hopefully finding the right answers. On today's show, you know what I want to do is I've got some kind of open question ideas, and rather than just throwing out the answers because it's different for everyone, I'd like our listeners to maybe think about what do they understand about the question, what do they know, and what do they need to know more about. And Dale, you're going to help me facilitate that conversation. How do you feel?
That sounds good.
Cool. Let's jump right into it because this is actually a really big pool of conversation. Insurance and asset protection. Let's say, oh goodness, this is actually kind of a little too close to home here in California. Let's say your entire house burned down. Let's say your entire home washed into the ocean. Let's say, or if you're in the Midwest, it blew away by a hurricane. If you were
mudslide,
mudslide fell down the hill on a mudslide. Would your insurance actually replace everything you own, or how could you ensure that everything is taken care of? Did people really understand how their insurance works, Dale?
Right. I mean, how do you quantify what you had in the house? I mean, the building is one thing. They knew, okay, it was X amount of square feet, and they had information on the building, but, you have possessions of a variety of things from pictures to collectibles, many different things in furniture, all this stuff in the house. So how do you quantify that? How do you help the insurance company to know what you had so they can replace it? Because most people have replacement coverage. So the recommended method would be either take a camera or take a video, go from room to room. Open the closets, open the drawers, and video what you have in each room and talk about it. That would be a way. And then save that video on your front door. No, save it somewhere else so you can readily
But even with that, will the insurance company cover everything because you took a video of it, or do you have to itemize things inside your home? And what about things like the jewelry or the artwork?
Good question.
The dog's playing poker. You got to make sure that you get another picture of that back. Or
Well, yeah, it's like sometimes I talk to people about certain types of accounts, certain insurance types of accounts that have riders, like an account that has an income rider. Well, they kind of give me that deer in the headlights look. So I just point out, so you bought your wife, a $10,000 diamond ring, right? And then you find out from your insurance company, your insurance agent, that jewelry is covered up to, let's say, $1,000 or maybe a maximum of $1,500 per one item, and maybe $2,500 to $5,000 for all jewelry. So what you do in that particular case, you get a rider, a jewelry rider. I don't know what they cost. Let's say $10-12 a year, and now that $10,000 diamond ring is covered. It's an insurance rider. It's an attachment to your homeowner policy that gives you extra benefits for certain things. So, you want to find out. There could be business equipment that you have at your home and stuff. The insurance you have on your home is personal uh, protection. So you need business protection on business items. Like my
Hmm.
office, I have to have a business policy to cover what we have in our office. So
Yeah.
you just have to understand how the insurance works. And it could be that way similar with life insurance. How does it cover? What does it cover?
Hmm.
Some people say, oh, I have a life insurance. I got it through the credit union. Well, a lot of those credit union coverages that you get free, basically, those are accidental death and dismemberment. That means if you die on accident, a car accident or something like that, yeah, it'll pay that 2000, but less than 2% of anybody ever dies by accident. In other words, majority of people die on purpose. I mean, die for other reasons.
Yeah. What about insurance needs changing over your lifetime? Do you need the same policies you had when you were 20 and 30 and 40? Are there things that you can do with older policies? And, what we know insurance is protecting your needs and your assets, maybe even some of your investments. And I'm going to ask you about health
Right.
insurance as well. Do your insurance needs change over time?
Well, definitely your life insurance. You might have a variety of different um, types of insurance. I mean, we don't necessarily personally handle people's home and auto insurance and things of
Hmm.
that sort, but we know how to coach people to at least have it reviewed with their qualified agent. But on life insurance, maybe what you bought years ago needs to be upgraded. Maybe it needs to be changed, or maybe you don't need it at all. Sometimes people get annuities that have a variety of benefits, features, benefits. Well, they've had them for many years, and maybe you can upgrade and improve the benefits. There's a variety of things that should be looked at from time to time, and just make sure they're up to date. When we take on a family, we like to review things from time to time. I've had several reviews just recently, anywhere from a little lady, she's 85. She calls me her son. I call her mom, and we've been working together for many years, and we review accounts. I had somebody else I reviewed their accounts, and because of their needs, they're younger. They're going to need different. They have different goals. They're actually going to be moving out of state, so
Mm.
we have some tools that we're going to upgrade to make sure when they move out of state that not only they can take them with them, which that shouldn't be ever a problem, but they can have the income they need for when they retire fully.
Yeah. And well, the reason why that's actually part of a conversation is because there are some states where you don't get to just move out and take everything with you. So you do have to consider sometimes where you're moving out from. I don't think that's something we have to worry about here in California. There isn't quite right. There is not an estate tax as far as as far as like leaving the state, going somewhere else, because there
Well,
aren't
no,
places like
no,
New Jersey.
that's not a
Like
problem.
you sell your main property if you live there for 30 or 40 years and you sell your property, I've heard there's something like an effective like a 9.25% tax on your property. It's one of the reasons why there's in certain places there's even more of a real estate crunch because people are like, well, my home is paid off, but we're going to go down to someplace warmer, but we're going to keep the property. We might as well just rent it out because we don't want to get taxed
Oh,
on it for selling it. But what about also? So when we're thinking about all of the different things that hopefully our home insurance covers, we know if anybody's ever experienced it that if you, even though you pay for car insurance, if your car gets totaled, it's not like you're getting a brand new car at full price. You're going to get what the estimated value is of what you were driving around, and it's
mhm.
probably not going to cover anywhere near a brand new car. What about Medicare as well? I just think with a lot of insurance, people think, oh, I've got my Medicare, so I'm completely covered.
Mhm.
And people get surprised at what comes out of their pocket when, even though they have Medicare.
Well, obviously, it's going to depend on what they use to supplement Medicare A and B. Medicare A is free, gives you hospitalization. B covers outside a hospital. There's deductibles, there's copays. If you get a supplement, if it's like a Plan G, you're out of pocket a deductible of a little under 300 a year, and then the Part B pays everything that Medicare leaves you owing. But then you need a Part D prescription plan So they all vary, and sometimes people get the Medicare Advantage plans, and those are more like an HMO. It could be like here locally, you have a Kaiser Senior Advantage, you've got Humana, you've got ARP, many different
Mm.
plans, and those are what they call Advantage plans. But you've got to jump through their network. You've got to go through your main doctor to get a referral to a specialist. You might have co-pays, and you've got to, understand what's the maximum out of pocket if you had major events go on that year. And a lot of them have anywhere from, 1 to even 7,000 max out of pocket on the copays, even though maybe the monthly cost is very little or zero. So understand how your plan works. That way, it's just knowing the different plans, know how insurance works. I hated it before I worked with my dad in 85 to 89. He was a State Farm agent. But once I understood it, I love sharing info, helping people see how to improve the people coverage, maybe reduce the car or thing coverages and improve the coverages and even save money at the same time. But it just know your options, know how it works.
Know your options. And if you feel that insurance is yucky in your opinion as well, you're overwhelmed by it, you don't want to be pitched something. If you'd like to review all of the different versions of insurance you have, you can call the phone numbers, set up an appointment, and you can talk with Dale Soutas or one of the teammates here of Soutas Financial. Call the phone number. Say, I would like my complete retirement tool review. 833-856-1382 is the phone number. Again, 833-856-1382. Call that phone number. It's not going to interrupt the program. That's going to go to our scheduling center, and we'll take care of it for you. No cost, no obligation. More Retire Your Way with Dale Soutas right after this.
How do you know if you're retirement ready? That's a question many people ask themselves as they approach their golden years. We believe the answer can be complex and depends on many factors, such as your savings, monthly expenses, and lifestyle goals. At Soutas Financial, we can help you determine if you're retirement ready. We'll work with you to assess your financial situation, identify any potential income gaps, and develop a customized plan that aligns with your goals. Don't leave your retirement to chance. Call us today to learn how we can help you work towards achieving financial security and peace of mind in retirement. Call Dale Soutas and the team at Soutas Financial for your complimentary retirement readiness review. Call 833-856-1382. That's 833-856-1382.
You've heard the phrase, you don't know what you don't know, and we believe it's especially true when it comes to retirement planning. There's a lot of information out there, and it can be overwhelming and confusing. So how do you know what you don't know? Social Security, RMDs, estate planning, investment risk. These are just a few of the many areas that a financial advisor can help you navigate. But what else don't you know when it comes to retirement planning? Are you aware of all of the tax implications of your investments? Do you know how to optimize your Social Security benefits? What about your long-term care and estate planning needs? We believe that by working with a retirement planning advisor, you can uncover potential blind spots in your financial plan and gain a better understanding of your options. Don't let unknown factors potentially derail your retirement. Call Dale Soutas of Soutas Financial to uncover what you may not know about your retirement future and start your complimentary written financial plan. 833-856-1382. That's 833-856-1382. This is Retire Your Way with Dale Soutas of Soutas Financial. Today we're asking you, and I know it might seem interesting because we're on the radio, we're asking you, our listeners, questions, but we want you to think about it. And if you're having a problem coming up with the answers, don't feel bad. But curiosity will move you in the right direction to hopefully do a little bit of research or maybe even ask for some help. My next question is for business owners or private contractors who have a specialty and they've made a really good living at that. For business owners specifically, is your business your retirement plan? Or do you actually have a retirement plan, a retirement savings beyond the business plan itself? Dale, how many times have you seen people bet their entire retirement on their business?
Many times, many times. I had somebody I visited with recently, and it's very interesting. He's, got multiple businesses. One's that's pretty good size and does really well. And he's getting noticed by a national company that wants to buy his basically buy his business. And the big question is now, because that's nice. I mean, you start a business ultimately to sell it. That's really, if you think about it, that's what you should be doing or looking at. That's how you, that's the purpose of running a business. So you can sell it. But in his particular case, it's, well, how do we sell it for whatever? And, the amount he's being offered, he's looking at the taxes, both federal and state, and he's going to get probably maybe even a little less than half of that. And he would like to net more than that. So some of my homework is working with my tax team on, well, okay, are there methods, or maybe take the offer and spread that over, the next 5 or 10 years. Would that help reduce, the ultimate tax on it? And so his net out of it is bigger. There's a lot of things, or negotiate a little bit more so he nets more. So what do you do? But a lot of people, they have a business, maybe as a sole proprietor, maybe as an LLC, maybe as an S corp. So there's even some of that should be reviewed, because especially if you're making decent money and you're a sole prop, and you could take advantage of the tax benefits of let's say an S corp, then why not spend a little bit to have your S corp set up? Because you can, an S corp, you could be on the payroll. So as the owner, even if you have employees, they're on the payroll, fine. And maybe you've been taking a certain, or been netting a certain amount from your business. But think about it. If you have a gross, let's just use round numbers for Dale's brain, 500,000, you get revenue of 500,000, and you're taking, let's say, 100,000 as net profit from it. But that same business, let's say you're taking in 500,000, it's set up as an S corp. Maybe you take wages of 40,000, and the other 60,000 that's going to come to you is coming to you on what they call a K1. So now you're not paying any of your Social Security tax and some other miscellaneous taxes to the tune of about 18% on that 60,000. So there's some savings there. So there's a variety of things to do besides, if you're going to sell it, how do we minimize the taxes? How do we structure the sale? How do you, before you sell it, how do you build it up and make it even more profitable for you? So it could be putting our heads together on those opportunities. But sadly, I see in the decades of working with families, more people who have been running their own business have less savings for their retirement than people who've worked for a company and they put a little bit aside every month, from their paycheck or whatever. They tend to have, the bulk of the retirement savings, but sometimes their savings, they've saved it tax deferred. So I refer to those as tax bombs when they retire. But so if you're running a business, know how to run it, know how to pay yourself first, as they say, know how to make sure you're saving for your future. Or if you're going to sell it, know how to maximize, the money you can get from it, minimize the tax if possible.
Yeah. In thinking about maybe a large lump sum that somebody might get in a succession plan of your own business, even if you're selling it, can you do something where, like, maybe whoever you're going to sell the business to, you get paid over a 5-year period as opposed to one big lump sum, and you get hit with that tax bomb that you're talking about? Could you schedule it out? Do we have to make sure that's contractualized to make sure you get paid? Or, because it's nice to see a big number of what you're going to get paid, but if you're going to lose half of it to taxes, you're like, well, what was the point of that big number I sold it for?
Right, that's part of it. But yeah, a lot of times people do sell businesses and they have, an actual note set up legally, properly with the buyer. And so they've got the structure to be able to be paid that way. And then it's kind of like, if that person doesn't pay you, they forfeit the business. It comes back to you. You could sell it elsewhere. Hopefully they haven't driven it into the ground or anything like that. But the point being is there are proper ways to structure things to even, if you're getting older and, hey, I'm not going to keep running it. Maybe my kids don't want to run it. How do I structure it or set it up to be able to keep it going? I love all my customers and, they love us. So how do we position somebody else in there to, take it over? So there's different things of that sort that need to be discussed and planned for, and it might take several visits or whatever. And that's, again, that's the nice thing about here. We're not going to charge you for how many times or any of the times you sit down with us just to, ask questions. And even if we need to do some homework for you, if there are actual financial tools, products that we can provide, manage your money or use other tools to provide income or whatever, we'll explain those tools and we'll explain how we get paid. But until then, keep your checkbooks, at home. Get your questions answered. Don't be afraid. We might be able to pull from resources beyond even the local, CPAs, attorneys that we have. We've got resources beyond that when it gets very complicated to pull from to help our families understand business-wise, individual-wise, family-wise, how to structure things best.
And I'm so glad for this new person that you're talking to. What we're talking about right now is, are you going to sell your business to create your retirement plan? But I also feel there's a lot of risk in that. I mean, for other newer, let's say, business owners out there, industries change, technology changes, consumers change, needs change. Maybe the business is dependent on you, your personality, your knowledge. It all depends on what it is. And my point is, do you believe in the always paying yourself first philosophy? I know that owning a business, people, especially in the beginning, are worried about cash flow. And so they want to keep enough of it. And the idea of squirreling it away and putting it in an account that we can't access until we get to a certain age, that makes people nervous. They say, I don't have the time for that. But what about you, Dale? If you could take the step back and talk to a beginning entrepreneur class, would you say for retirement, always pay yourself first, no matter what the business does?
Well, that phrase bugged me in a way because my dad used to preach that to me all the time. I work with him. Okay.
So I just conjured up your father for you. This has just turned into a therapy session.
Therapy, yes, yes. So anyway, no, it is smart. And then how about a different example? A year or more ago, I had a gentleman come in, and part of his business was to, buy and build properties. So the method I was showing him was a method where he could put money into an account that grows, and he can access tax-free from that account, and by borrowing money out. It's actually using life insurance as your own bank, if I can use that phrase. Max funding life insurance. Putting like $100,000 a year in for 5 years, and then if he needs money, $100,000, $200,000, he can borrow it out. And yes, he'll be charged, let's say, 4% interest. But if the account earns 5, 6, 10%, whatever, even the money he took out and spent, he's earning money on because of the way that is structured. But so there's a variety of things that can be used, even Roth IRAs or SEP Roths, where you could put larger amounts in, and you still have access to that money along the way. If something really happened and you have an emergency, you can pull from your Roth without penalty, without taxes, because it's after-tax money. So how do we pay ourselves first, but also have a backup for capital if we need to keep, for the business, to keep it going, keep it growing? So again, putting our heads together. What's the best method so that you can not just throw all your money in the business, and when you're done, it's like, okay, well, that was great. Now I don't have anything when I retire, or maybe it's not a sellable business down the road, So just look at the whole picture.
Look at the whole picture. And while you're running your business, I understand that cash flow is king, and it's very, very important. But if you want to make sure that you have a retirement strategy as well as a business strategy, you can call the phone numbers. You can hear Dale's helping out folks right now with that. Do you want to sell your business to create your retirement plan? Do you want to keep your business, maybe sell it to somebody and keep some income flow? There's all different ways to design it. But if the business is 100% of your retirement plan, industries do change. It makes us a little bit nervous. So why don't you get a second opinion on how you're running everything? 833-856-1382 is the phone number. You can reach out to Dale here. We can talk to you over the phone, over Zoom, or face to face, so you can meet the man, the myth, the legend in person. Your financial advisor, Dale Soutas of Retire Your Way. 833-856-1382 is that phone number. More with Dale Soutas right after these bottom of the hour messages.
Are you worried that you waited too late to start your retirement planning? That you waited too late to start saving? At Soutas Financial, we believe it's never too late to start planning for your future. We can help you develop a personalized retirement plan that is tailored to your current needs and goals. The team at Soutas Financial will sit down with you and provide an evaluation of your current path, including your investment strategy, tax planning, and risk management approach. We'll help you identify potential areas for improvement and work with you to create a retirement plan that is designed to help you work towards having financial security and peace of mind in retirement. It's not too late for you to get started with Soutas Financial. Call us today to schedule your complimentary retirement planning session. We believe we can help you get on the path to financial security and peace of mind in retirement. Call Dale Soutas and the team at Soutas Financial to get started on your own complimentary written financial plan. Call 833-856-1382. That's 833-856-1382.
In your retirement spending plan, which accounts do you take from first to pay your monthly expenses? Your 401ks, 403bs, or 457s, or your IRAs, or your Roth accounts, investment, or savings accounts? Do you turn on your Social Security right away or delay? Do you use the growth from your mutual funds, ETFs, or bond funds first? Did you sell your business to create income, or do you have life insurance or annuity options? Or what about using HSAs for medical costs? Are you unclear if you have a retirement income strategy at all? You have accumulated assets for retirement for years. Now you need an efficient strategy to make certain these assets work together and last as long as you need them to. Call Dale Soutas of Retire Your Way and Soutas Financial for your own complimentary written income plan right away. 833-856-1382. That's 833-856-1382. Or you can write Dale at dale@soutas.com. SOUTAS.com. This is Retire Your Way with Dale Soutas of Soutas Financial. Today, we are asking you, our listeners, to think about some of these questions. And if you don't have the answers to them, if you're a little bit unsure, that's okay. That's why we're discussing these things today. Because sometimes the answer to these questions are different for everyone. Right now, I was going to ask you, and it's a bit about retirement readiness. When can someone afford to retire? Is that the right question? Can I afford to retire? Or is there a different way that we should be looking at it? Because I think a lot of folks look at their lump sum and they try to guess if that's enough.
Exactly.
Mm-hmm.
Yeah, I mean, I think I've said this before. One of my hobbies is the high-powered rockets. We do it way out in Helm in the middle of nowhere. And we... so they've been doing it out there for 30 years. Well, I set up my Retire Your Way tablecloth on my table. I have my 9-foot rocket that's painted with our logo on it and all that. Fine. And they announce it as Dale Soutas, Soutas Financial. And okay, so they know me out there, right? So I had actually the president of our local club, and he's out of, I think, Sunnyvale. And he came up one day and he actually says, so do I need 2 or do I need 3 million to retire? And I just looked at him and smiled. I said, I don't know. That's a good question, but it's not about, how much you need so that you could stop working and retire. It's what do you need to maintain your lifestyle? What do you need now that you're retired and you have more free time? What are you going to do with that time? What are your interests? What hobbies? What travel? What is it you really want retirement to be like? That's the whole point. And once I know that, and we can, quantify it with, well, what are you going to need to pay the bills? What are you going to need money-wise if you're married to spoil your wife, right? Did I say it right? I think I did. In other words, the paycheck, the playcheck. And then we know how to calculate for your future without having to buy long-term care, nursing home insurance, the care check, so to speak. Build that into your income plan. Because if you never need it, don't throw money out the window. Have your income increase, or have a tool that you can turn extra income on when you need it down the road. But the question should be more so, like I said, what is it you need? If you're not working, what is it you need to pay the bills? Number one. What is it you need to do all those fun things that you'd like to do? And everybody's different. Some people, hey, I've already traveled for years and I just want to, I'm a homebody. I want to stay home. We'll dink around in the garden, and get with the family, and we don't really spend hardly anything, and we're happy. Great. Um, so in fact, I just had somebody, they've got tons of money and gobs or oodles, those nice financial terms, right? And they really don't see the need of ever touching the principal. Their income, Social Security wise, pension wise, will be more than enough. So the real goal is to have that money pass on and help the kids and grandkids. So everybody's different,
Hmm.
and that's
But Social Security doesn't pass on, so we're looking at the assets, and
yeah. I wasn't talking about their income, pensions,
okay,
and all that won't
yeah.
pass the kids, but your house or properties,
Hmm.
your savings, your retirement accounts, life insurance, all those other things, can pass on, especially if you have it set up properly to bypass probate and go straight to your loved ones.
Hmm.
Yeah, that's what needs to be, set up properly.
How do you like changing the frame, maybe from a black frame to a silver frame, or from a chrome frame to a wooden one, rather than saying, "Can I afford to retire?" Saying, "Have I provided myself enough for financial independence?" Meaning, is there enough there that I'm not going to have to depend on others no matter how long I live? Can we frame this in a more positive way than, "Have I saved a large enough bucket of money?"
Yeah, it again, that's really your independence has to do with what do you want to do? It
Hmm.
still comes down to your lifestyle. It all boils down to, well, what do you need to pay the bills? What if they say, "Hey, I'm going to be moving to Texas, or I'm going to be moving at somewhere else." All right. So as we move together, as far as with your plan, we might have to tweak, the income goals, what you need along the way, but it still comes down to be independent. It doesn't matter if you've saved 100,000, 200,000, or a couple million. It all boils down to that lump of money. If we need additional income, how can we, derive that most effectively without, running out of money, without running out of income? And I want the income to last. Like I say, normally we push it out to the wife's age 100, the plan that is.
Hmm. What about building in the dream experiences you just talked about? Moving to a different state, or maybe being able to travel back and forth, or maybe being able to host the kids. Maybe we've got a guest house, on the back of the property or something. Do you build in all of those dream experiences too?
Right. It could be they like taking trips, and
Hmm.
like I mentioned a couple years or more ago, a younger couple, they're in their mid to late 50s. They take a couple trips a year, 10,000 each trip, so 20,000 is their normal, goal for, what we call the play check. But in their plan, I made it 40,000 just in case they want to do more, right? And when they fully retire, and their money won't run out with the proper structure. So, what about if they not only want to move to another state? What if they want to help the kids? What if you have your income dialed in? You know your income for the rest of your lives will keep paying the bills, will keep up with inflation, all that good stuff, right? And you'll be able to do all the fun things you want to do. We've got long-term care covered. Even if you need help, you don't have to be relying on the kids or having, living with them or them living with you. You have it all dialed in properly, and you still have, plenty of money left over. Well, some people would like to help the kids now while they can see them benefiting, instead of it just knowing that, hey, after I die, you'll get this lump of money. So that might be things like that. It's like the Baby Boomer Dilemma movie talks about how wonderful it was for that couple to be able to help their kids even get into a home in an area where it had better schools. Again, helping the kids, maybe the grandkids out while you're alive, if it won't affect your long term, income goals. If you have that set, it makes it easier to do other things that can help out kids, family, charities, whatever you want to do.
Hmm. If you would like to know what your dream experience could look like for you in retirement, because some people have even a hard time spending their own money. And I'm not talking the bill money, what stuff you need to pull out, but then you're guessing, how long am I going to live? How healthy am I going to live? What exactly can we do? If you're wondering how you can enjoy your own nest egg and you're unsure, call the phone number. Set up a time. You can do that here. Well, you can call the phone number. You can go to the website, schedule a time there, 833-856-1382. But here's the website. It's Soutas.com, Soutas.com. For this guy who I'm sitting across, Dale Soutas, financial advisor right here in California. You want to know what your dream experience can look like in retirement? Let's map it out. And Dale, again, for 2026, for the really high inflated cost of what to come in and sit down with you?
We actually doubled the fee to come in from last year.
Yeah, it's now 2 zeros.
2 times 0. Let me see. I'm doing the math. I got to kick my shoes off for that.
There is no cost, folks. There is no cost to schedule a time, a conversation, to have your portfolio review. And here's just another perspective. Maybe you're working with somebody and looks like your returns are good. Maybe you've got an insurance person.
Exactly. Yeah, so I have people, my team, they know, they'll gather initially maybe a little info. Our team knows how to help, you understand it's not hard. And I have people who many lately that have said, I've never used a financial advisor, and they don't even know what questions to ask. That's okay. Just sit down. We'll get acquainted. I mean, the big thing, and you don't need to bring your statements and all that. I don't need account numbers, Social Security numbers. Get me in the ballpark. What are the types of accounts? What approximate values, property values, income now? What's your projected income in the future looking like? As long as I see the ballpark and get familiar with what you want your retirement to look like or want it to be, or even if you're retired, how to keep it going, then we work from there. And it's just simple. We relax together, come in, have a cup of coffee, water, soda. We got snacks. It's just a conversation.
Tea. Don't forget the tea drinkers. You got tea in there as well.
Oh, tea. Yeah.
And you'll meet the entire team.
Coffee.
There's Dale here, but there's a lot of folks, who surround Dale and make him able to sit down with as many people as possible. We've got teams of researchers and folks who help us implement the strategies, everything from healthcare to the portfolio designs and what's going on. So find out what your team could look like here. Call the phone number, 833-856-1382. Ask for your absolutely free and no obligation portfolio review from your financial advisor, Dale Soutas, not just of Retire Your Way, but of Soutas Financial. In business for decades, helping folks just like you listening to this program be and stay retired. If you'd like to learn more about Dale and his team, you can also go to the website, Soutas.com, Soutas.com. More with Dale right after this.
Will you outlive your money? It's a scary thought, but it's a real concern for many people. In our opinion, that's why it's crucial to have a solid retirement plan in place. We believe that with proper planning, you can work towards making your money last as long as you do. Don't wait until it's too late to start thinking about your financial future. Call Dale Soutas and the team at Soutas Financial today to learn how we can help you create a retirement plan that can potentially help you obtain peace of mind and security for years to come. Don't let the fear of running out of money in retirement keep you up at night. Take control of your financial future today. Start your Retire Your Way review and financial plan by calling 833-856-1382. That's 833-856-1382.
Call Dale Soutas and Soutas Financial and Insurance Solutions right now to receive your complimentary tax map with your retirement readiness review. Learn multiple strategies that could protect you from higher taxes now and in the future. Taxes are a threat to your financial stability in retirement, so help protect yourself from the potential threat of rising taxes. Call Dale Soutas and the team at Soutas Financial to receive your complimentary tax map and retirement readiness review. 833-856-1382. Their team will help you navigate the financial waters to pursue your retirement goals. They offer inclusive retirement services such as investment directives for your portfolio, income-producing strategies, and wealth preservation plans for your family and legacy. Call Dale Soutas and the team of Soutas Financial and Insurance Solutions, 833-856-1382 right now for your retirement readiness review, and also receive your complimentary tax map, strategies to help you keep more of what you've saved in retirement. Or write us at the email address dale@soutas.com. This is Retire Your Way with Dale Soutas of Soutas Financial. We just started to brush on it, but what do you mean by the dream experiences in retirement? You've asked people, I'm sure, a lot. Say, hey, put away those statements when you come in the first time. I don't need to take a look at it. What are some of the first things you do to get to know somebody the first time they come in?
Well, even the little questionnaire we give them, it talks about things that they're interested in. It could be travel, it could be family, it could be camping, other hobbies, interests, sports, activities, whatever. But really, I like to focus in on, and I used to ask this question, this dream experience has made me think about a question I used to ask regularly. Paint your best day. What would be your best day? What would you, when you get up, what would it look like from start to finish? What would you do? I like people to think about that. And I don't know why, and it's hard for all of us, I'm sure, but what is it you would be doing that you would really enjoy doing, for that whole day? Well, how do we have those 7 days a week?
Yeah.
so to speak?
I was going to say one day is great, but and maybe the next day you want to rest up a little bit as we get older because we need to. But
especially at your age, right?
No, stop. But how do we repeat that best day every day? Or what is
Exactly.
does that mean seeing more family? Does that mean the traveling is great? And I'm sure even from a wonderful trip, we like to come back and recuperate and take it easy and take a breath a little bit. But what would all of your best days? What would the best days? I like you asking what does your best day look like, but I like what does your best month look like as well. Like, hey, I would love to take a trip, but then I also want to be able to slow down. I want to be able to eat what I want to eat. I want to live in a house that I'm comfy in, right? Does it include the longevity of it?
And let's say as they get closer to retirement, they might already have that house that's comfy, right? Maybe they want to have more time to kick back and relax and read, sit outside and read, go to the park and walk. Maybe they want to, be out golfing more. I guess the latest deal is pickleball. I have people who say, they travel and they like to join the pickleball tournaments wherever they go. Maybe cruises, maybe just traveling, taking a driving trip across the country. It just, again, what kinds of things would you really enjoy doing? And my goal is to help you see ways to do that and to keep it going without the worry of money. I just don't like people having what we call a just-in-case retirement. And I've seen it. I had a couple who came from out of state to help their daughter, son-in-law with the babies. And they were the daycare for them, which helped, no doubt helped the family save for their future better because they didn't have that daycare cost. But when they came, they had put everything, their retirement accounts, everything was just in the bank because they were too afraid of the stock market to, steal money from them. But their money was going backwards because it was just basically like savings accounts. So, we set up, some structure to it so that they knew their money would last and they'd be able to keep doing what they're doing. And because eventually the grandkids are going to be big enough that they don't need grandma and grandpa to watch them, and they're going to be wanting to travel more and do stuff. So again, but people sometimes squirrel away their money, and even though they say they want to do all these wonderful things, take trips and buy the boat or whatever it is, right? And then they retire and they don't really do any of it. Their money grows and grows and grows, and then they die, and it goes to the kids, and the kids do all those fun things. Why? Because, just in case. We might need that money for just in case. Just in case what? I ask them. And they say, well, something happens. Like what? Well, medical. Well, you have medical insurance. They're really talking about like long-term care. So they have it planned to how to pay for care down the road properly. So that has to be part of a solid retirement income plan. And again, I don't like using the long-term care insurance. There's easy ways to build in what I call a care check to your income plan. But that can be discussed. It's just, what's your dream day, week, month, year?
And then doing it for as long as you possibly can, as long as our legs and our back and our feet let us do it, right? For as many years as we can.
What if they already have things set up properly to where they don't really have to shift things around, and they'll be fine. It's okay. I don't need to make money off of you just to pat you on the back and say you're fine. Keep doing it. I'm happy for you. But I run into a lot of people who they've got their assets, they've got money, they've got good income coming in. But for instance, they want things to pass on to their kids, and they've not set up anything to properly make sure it goes to the kids. They have no living trust, which keeps the property out of, probate. Sometimes beneficiaries are not kept up to date. Maybe it's just your spouse. And well, what if your spouse dies and then you die? Now that asset goes to, again, probate possibly because you didn't name the kids or others as contingent beneficiaries. So, there's, the legacy question comes into play.
Yeah. And, thank you for bringing it up, because that's what I was going to ask about next. I mean, we want every single day to be your dream day. And how do we map that out financially? But when you say the word legacy, does that necessarily mean everything that we're leaving to the next generation or possibly our spouse? Or some of legacy planning also protecting yourself and your spouse while you're still alive? I mean, is it about the piles of money or philanthropy, community? What do you mean by legacy?
Well, legacy is who inherits what you don't spend.
Okay.
Whether it's your real estate, whether it's your savings, whether it's investments, retirement accounts, life, and where do you want that to go? It's a simple question, but sometimes people don't realize. Unfortunately, I did have a little lady pass away recently, but we had everything set up properly. She had her trust, which broke down properties where they go. She had accounts. She had some going to her church. She had some going to her kids and some going to her grandkids. So it's about detailing that out properly. Maybe ones, and I've had several, they don't have children or grandchildren. Okay, so still, where do you want things to go? Sometimes it's nieces, nephews. Sometimes it's charities. I have a little lady. She's got several, the dog type places, but they're charities. They're properly set up charities that can inherit whatever she has, down the road. But again, if you're married, how do you have things properly set up to even pass to your spouse? There is sometimes that even needs to be reviewed. Maybe you have an account, or maybe you have property that's set up as joint tenants. There's two ways to have joint tenants in common, and joint tenants with rights of survivorship. So just a nutshell, let's say you and your spouse have joint tenants in common, and you knock your husband off, he's gone. His half of the house can now be in probate because it doesn't have rights to pass on to the survivor. Joint rights of survivorship would be the proper way for joint. But on real estate, you really want that, or accounts. Joint rights of survivorship is the proper terminology, not just joint tenants in common, if I say it right.
Yeah, I know.
Don't ask me to say it 5 times fast.
Well, and folks are driving around, and it's a lot to memorize, but more so it's making sure that it's mapped out the proper way for you and your family. There is reviewing all of your beneficiary designations and making sure stuff goes where you want it to. There's possibly putting things into trusts or using a will, but also to protect those monies while you are still around, but possibly need that financial protection if you're no longer able to make decisions for yourself, or you need a higher level of care. Estate planning isn't just about the leaving of stuff. It is about protecting for a while when you're deeper into your retirement years, and what we're able to efficiently pass to the next generation. When do you start having those conversations with folks? Or is it case by case? You were talking about somebody who was a little bit younger selling.
Yeah, everyone. I had a young couple a while back, just recently, and they're, I think, in their 30s or so. And
oh, wow.
it was neat. It was fun. And they are venturing out. They've got I mean, she's working towards her nursing career. She's, getting more and more involved in that. And he's got a little business he's getting going. And, but basics, okay. Maybe they don't own, let's say, a home. So there's no need for the trust, but anybody 18 and above should have at least a properly worded financial power of attorney and a healthcare directive. The power of attorney allows somebody to handle their money if they can't. The healthcare directive gives somebody the power to, pull the plug, well, actually to talk to the medical facilities for them. So, but with everybody, if you've been married forever and you have properties, I'll ask, one of the questions I asked, do you have a living trust? Yes or no? And when's the last time it's been reviewed or updated? I don't get anything out of referring you to the attorneys we use. I don't care about that. I just care that things are properly worded. And if you've refied many times, your house may not still be in that trust. It might have been taken out of the trust and not put back in. So just some basics, nothing major. Just we take you by the hand and walk you through with some simple questions.
All right. Thank you for your time today, Dale Soutas. That's all the time we have for today's program, but you can still get started on your complete portfolio review at no cost to you. Call the phone number, set up your time. We have folks who are standing by, 833-856-1382. That's 833-856-1382. Or you can schedule your time at the website, Soutas.com, Soutas.com for Dale Soutas, the financial advisor right here in California for you. Sit down with Dale and his team. Let them get started for you, no cost. Thank you for listening to Retire Your Way with Dale Soutas. I'm Spike. We'll both be back again next week.
Any reference to free or complimentary services/products does not obligate a prospective client to engage the firm or its representative for any future services. This is not endorsed or affiliated with any federal Medicare program, nor any U.S. government agency. If applicable, we do not offer every plan available in your area, and contacting us will direct you to a licensed insurance agent. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options.
Investment advisory services are offered through Foundations Investment Advisors, LLC, Foundations, an SEC registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Any discussions of specific strategies are for informational purposes only and have been provided to help determine whether they may be appropriate for your specific situation. If applicable, the primary goal is converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstances. Comments regarding a particular client's experience may or may not be the same as another client's experience and is not an indication that any client or prospective client will experience the same or a higher level of future success or performance. Foundations only transacts business in those jurisdictions where it's properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Nothing herein constitutes a recommendation that any security, portfolio, or securities or investment strategy is suitable for any specific person. No legal or tax advice is provided. Please review your retirement, tax, and estate legacy planning strategies with a legal tax professional before transacting or implementing any strategies discussed herein. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. This is not endorsed or affiliated with the Social Security Administration, any federal Medicare program, nor any U.S. government agency. If applicable, we do not offer every plan available in your area, and contacting us at the phone numbers provided herein will direct you to a licensed insurance agent. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all your options. All rights reserved.